Good morning, ladies and gentlemen. This is Josh Horton speaking with Pinnacle Financial Services. And if you haven't spoken to me in the past, I am the sales director for our life, annuity, and long-term care department. And I'm joined today by our regional sales consultant, Brett Walderbach, over at North American. So we're very excited today to talk about our topic, which is the SEP IRA, and is it right for your client? So I know spoke to a lot of agents about this topic, a lot of people excited and interested to find out more because they're being asked about a SEP by prospects, by clients. What is a SEP? That kind of stuff. So before further ado, before we jump right into the discussion here, just a couple of really quick housekeeping items. So your phones are all on mute, just so that we cut down on some of that background noise. But if you do have any questions at all, anything that pops up, please feel free to type that into the question box, and we will definitely get to all those questions at least by the end of the discussion there. And you see our phone number there on the screen, 800-772-6881. And we here at Pinnacle Financial, if you haven't worked with us in the past, we are a direct brokerage firm, IMO, FMO. Some of the insurance companies refer to us as, but really we're a partner for all of our advisors out there. We work with agents, financial advisors, all different shapes and sizes, agencies, individual agents. So if you're not with us and you're interested in signing up or talking more after today's call, you can reach me directly there at extension 7707. And I have Brett Walderbach, as I mentioned. Brett, I'm sure you're out there in the inner space. And Brett is a great partner for us on the annuity side with North American Company. North American is one of our premier partners, definitely one of our biggest companies on the life and annuity side of things. A-plus company, and just really a pleasure to work with. So we're really happy to have Brett here today. You out there, Brett?
Yes, I am here. Good morning, everybody. Thanks for the intro, Josh.
Yes, sir. Yes, sir. So I'll just kind of pass things off to you, and I think we had said we were going to keep it to right around about a half hour or so. Is that right?
Yep, absolutely. I'll be respectful of everyone's time. Do appreciate everyone again taking time out of your busy day. I know this is time away where you can be making calls to prospect clients, existing clients, especially when markets are rallying back from yesterday's 700-point drop to the Dow. So I want to bring the most value possible. I'm really excited to talk about this sales concept. Being on the road and having a chance to get in front of a lot of marketers like Josh and also agents to be able to talk about this, generating a lot of excitement, especially when you think about some of the small business owners that you're probably working with and their tax extension. Their taxes are going to be coming due here in October, and they're going to be looking, again, finding ways to maximize deduction and business planning, but also you can help them with the retirement solution as well. So just, kind of show a couple of things I want to talk about. So one, who we are, a little bit about just our color wheel. We like to talk about that on where our products fit in to different areas for annuity design, and then SEP IRA concept as well. We will go into, I'll show you kind of the SEP IRA agenda itself. We'll talk about really where that's a good fit for, what is it, and the basics, and really how to utilize that with one of our solutions. A little bit of history. North American's been in business for over 130 years. So we are, I would say, a pioneer. We were there since day one of the development of fixed index annuities, and we have been a top carrier, through that. That was at probably 28 plus years now in the index annuity space. So we're not, a come by lately carrier. We're not just trying to get into the game. We are an innovator in the annuity space, and definitely want to be there to help you, grow that business and help your clients. The other thing with that type of duration in the marketplace, we are A+ rated. So we have AM Best, S&P Global, and Fitch, all A+ ratings, very strong. And one important thing to know about us, because we are a privately held insurance company, a part of Siemens Financial Group, it allows us to look long-term and not have to make short-term adjustments. You've seen here very recently those publicly traded carriers making significant competitive changes in their products because of short-sightedness, because of the pressure of shareholder quarterly expectations. So without having that, we have the ability to continue to look long and plan long, with our products to keep them competitive for you. So I did mention, I got another agenda inside here. So we're going to talk about what is a SEP IRA now, why to utilize that, who's a good candidate for that as well, and then our sales positioning. Because it's a little bit out of order and a little bit unconventional, who is that right fit for a SEP IRA? Again, if you're working with small business owners or self-employed or independent consultants, one of those are the easiest, I would say, low-hanging fruit, where they're definitely a great candidate for there. A lot of those people might look at solo K opportunities. Again, there's some great advantages when you look at a SEP IRA versus a solo K, due to the fact of you don't have any of those administrative fees of that plan from a solo K to a SEP IRA. You also have layered LLCs, and then some of those employees that moonlight, again, probably more of that independent contractor type of deal. So the basics around a SEP IRA, it is an employer-sponsored retirement plan. It's 100% employer contributed, so there's no matching inside of there. And it's, again, sole proprietors, partnerships, corporations. We have less than 5 employees. So income limit, $280,000 for 2019. And then also some of those benefits. You get those higher contribution limits over the standard IRA, $5,600 versus $6,000. You have that tax deduction on a big portion of that, which is the exact same amount as a solo K. Benefits are immediately invested. So, and then the contributions do not have to be made every single year if not needed to be. So, and then the employee controls the investment option because it's owned by the employee, it's funded by the employer versus a solo K plan, actually owning that investment. So that's just a little bit of that brief secondary agenda of why that SEP IRA idea. So I did promise I show you kind of where our products fit in because we have a number of flexible premium solutions. And when you start thinking about products like SEP IRAs, so you think about, well, if there's going to be ongoing contribution, most of the carriers out there are single premium products or modified single premium products and not flexible. So North American, we've got a number of flexible premium products, Charter Plus, Performance Choice, and what we're going to talk about today, the Income Choice 10. And you can see with all those different products where they kind of fit in that spectrum of what are they used for the potential client scenarios. We have the accumulation, we have the income, we have your multi-benefit solution, and we have some very unique, innovative liquidity features. So with that said, I really want to make the rest of the conversation about the concept around how would you utilize this and where would this fit in for a potential client. So let's meet that scenario of our potential client today before we talk a little bit about their product. So we've got Samantha, who's a small business owner. She lives very comfortably off the annual salary that she's taking for her business, but she's got a couple of goals as she's closing down on retirement, probably looking at fully retiring at age 70. She wants to max out a SEP IRA with those contributions for the next 15 years and get that max benefit. So she also wants to be able to turn that into supplemental income for retirement due to the fact that she has some concerns that we'll look at a little bit later about where those sources of income are going to come from and what of those are going to be able to be counted on for the rest of her life. So this is a client scenario that we're going to talk about inside here, but now let's just peel back and talk about the solution we're going to use. We're going to introduce to Samantha the Income Choice 10, which is a great, what I would call incubator product to really get that SEP IRA off and running for her for these next 15 years that she can make contributions to. It's going to give her the highest income potential for that pension need that she's looking for, but it's also solves that we need a flexible premium product that she can continuously add on to. A couple of things that I want you to know about the Income Choice 10 is one, it does have a premium bonus. So, but it's not to the accumulation value. So it's not an accumulation value bonus, it is a GLWB or a guaranteed lifetime withdrawal benefit bonus. Important for what she's trying to solve for. She's trying to turn that IRA into supplemental retirement income. And with that GLWB benefit in this product, we're going to be able to achieve that for her. So it's going to give her a lot of flexibility when she gets to that point of taking retirement income. She could take level income for the rest of her life. She could do an increasing payment amount by the increase of an index due to the declared rates there. So that's an option for her. So she has a lot of different crediting methods to build up that benefit base by using traditional indexing methods with or without caps, some subject to participation rates or margins. And then the way that GLWB works that we're going to talk about here in a little bit, it's got stacking and roll-up credits that take place. So a lot of you are probably familiar, with some of the top products out there with participating income. Maybe they're given 150% plus an upfront bonus of 15% over the course of 10 years waiting for income, but it's single premium. Or you have another one where it's 175% plus a bonus, and it's got a 10-year wait. This doesn't have the 10-year wait, but here's how our stacking works. We take 100% of your premiums and any annual contributions, and then we'll compound that annually plus that 5% bonus. So because this is flexible premium, we're not just giving Samantha 5% bonus. She is getting bonus for every contribution she makes over the first 5 years. So think about that 5% bonus over 5 years. That's a 5 by 5 on there, not annuitization 5 by 5, but a bonus 5 by 5. 5 years, a 5% bonus for every dollar that's put in there. That's going right to the benefit base. So, and that would be your beginning of the year guaranteed lifetime withdrawal benefit value. Your premiums plus the 5%. So the next part of that is what are we going to stack on top of there? Well, we're going to, at a minimum, guaranteed 2% roll-up for 20 years on top of that 5% bonus. So that first contribution, you're going to have 7.1 the way those two will compound on each other. So that's a guarantee. Plus, when you make $1 in your accumulation value, we put $1.50 with that 2% bonus or that 2% roll-up and that 5% bonus. So, and that's your end of the year guaranteed lifetime withdrawal benefit value. So you're going to get 5 for every dollar you put in. At a minimum, we're giving you 2, plus we're giving you 150% of every dollar you earn to the accumulation value. We're also doing this at a very low cost of 0 basis points annual fee. We're not charging a fee for this benefit. It is built in to the structure and the design of how we've priced out this product. So you will see when you look at crediting rates, if you stack up this product with like our Versa Choice, which we've talked about a lot with these calls. So your trade-off is I don't have as high of accumulation participation, but I'm also getting 150% of that when I earn money and my benefit base, plus a minimum guarantee and a bonus. So the trade-offs are pretty reasonable, especially when North American's not charging my client a fee. So again, just walking through it one more time, $100,000 beginning initial deposit, 5% GLWB bonus. We know we got $105,000. We throw on our 2%. Now we got initial $2,100. Again, 7.1. Way that compounds. Plus, let's say we had a 2% assumed interest rate. So that's on the dollar amount. That's $3,000 of additional credit. So at the end of the year, my GLWB value has grown from $100,000 to $110,100. And again, we're doing that all at no fee, and that's just a nominal return of 2% on top of your 2 and your 7. So you will not need extraordinary performance from an S&P 500 indice to make this product work very well to your client's annuity contract. What you want to be able to do on there is utilize this to the maximum. It's for that client that's looking for ongoing contributions. Hence why we're talking about at the beginning, using this for a client that's trying to max out a SEP IRA. They're going to continue making those ongoing contributions. They don't have to be married to it every single year, but doing that heavily in the first 5 years and maxing that out, that's going to give them the most bang for their buck because 5 times 5, that's a 25% benefit-based bonus out there that would be unmatched and unrivaled in this business, even if we took away the 2% minimum roll-up for 20 years. So this would be probably the best product out there that you can find for someone that's trying to maximize that with stacking or participating income. We're going to keep this simple for your client on how to credit. There is over 120 low volatility or managed indices out there, or smart beta indices. There's a lot of different ways people will describe those. So we have that, but we've chose to partner with the S&P 500 versus an investment bank that has their agendas, that has their profitabilities to hit, so that we can go out there and buy options to the S&P versus an investment bank. So we have your monthly cap, we have your annual cap, we have your annual point-to-point uncapped with margin. So on the S&P low volatility daily risk controls. So we have a 2-year on that. So we also have the daily risk controls on a 1-year with participation threshold strategy. And then we have your annual par rate. One of the newer strategies that we introduced a couple of years ago that does not reflect on the slide is we do have our popular S&P multi-asset risk control on a margin as well, which is a very strong index, which is what we're going to utilize in the illustration we'll look at here in a little bit as we revisit Samantha. So that index today, along with the low vol, is over 10% performance with very competitive margins on there for your clients to give them great potential. So let's take a look at Samantha. Let's remember what she was looking for. She's 55. Again, we know she's living comfortable with the salary she's taking from the business, but what she really wants to do is get a jump on that SEP IRA and be able to turn that into a retirement income stream down the road. So, but again, like most clients, she's got concerns. Sequence of return risk, especially when you're talking about someone that's going to be deriving income off of a retirement account. Sequence of return is a big deal. So we all know what happened yesterday in the marketplace. We had a big sell-off, a big pullback. So, and if someone started taking retirement income distributions and had that big pullback in the market yesterday, almost 100 points off the S&P 500, that's not a great way to start your retirement income distribution because now you're behind the 8 ball. So we can remove that. So she's got the risk of longevity. Will these dollars last? And what about solvency of Social Security? You know, that's probably the only guaranteed income stream that someone can really rely on if they're not using an annuity. And what's the solvency of that, and what's the likelihood of that being available for her when she needs it? So that's where Samantha, we're going to show her the income choice 10. We're going to show her her max contribution, which would be fully deductible from the business of the $20,000 for what she wants to do there for what that earned salary is. So we got $20,000 initial premium. So then we got $20,000 moving forward. So we're not able to show any additional premiums in the first year. In this scenario, we're not going to add any. So that's why you see a dash for year one. We didn't add additional 20 to make it 40. If you want to do that with our software, you'd put $40,000 first year because we don't have first month contributions. We have contributions starting year 2. So that's how this is laid out. So unlike clockwork, she's going to continue to make that $20,000 contribution, whether that's on an annual mode, whether that's 2 times a year. They make a deduction for $10,000, but each year she'd be deducting $20,000 from that business to contribute to the SEP IRA. So have that write-off. So if we earn no interest, just looking at the guarantees, so if you put 20 in for 15 years, at 70, when you're ready to start taking the income, you're gonna be able to take $20,298 for the rest of your life. That's just simply your 5% bonus for the first 5 years, plus the 2% roll-up. And that's a distribution rate of 5.75 at age 70. So that's not one penny earned on the index side. That's 15 years of unprecedented market environment. There's probably a lot worse problems than not earning an index credit if that's actually happening. But from 70 to age 115 when the annuity contracts commence, so that's essentially taken $900,000 in guaranteed lifetime income. And if she does have that kind of longevity, that's fantastic. It'll still continue after that. So, but now let's take a look at that same scenario and apply using an index crediting. So this is using 100% to our Mark V. It does have a margin on there for safe assumptions. I don't have the rates in front of me. We'll just assume a margin. I think it's about 3.5 on there. So you can see if we apply the margin, apply the bonus, apply the roll-up, and what you're going to see, you're stacking. This is your roll-up and your index crediting. So you have great potential to build up that benefit base, through those first 15 years. A couple of years you had 0, so you just have 2. So, but again, this is going to give her the best potential, allow the crediting of the index to help build that income versus just saying, I'll take 6% for the rest of my life regardless. You have time on your side. You're not going to be touching this for 15 years. Give yourself potential to do better than a 6% roll-up, and you can see it doesn't take anything crazy or extraordinary to make this thing work. Now, we've got some great years in there because we're using an unkept strategy. So, but we're only annualizing and averaging 4.4%. So the index annuity is kind of in that 3 to 5% expected return. So this is kind of a little bit above that mean of 4, but not by much inside there. And we're not deducting a fee off this product either. So with that type of average return over 10 years and stretching that over 15, we're looking at now $31,244 for the rest of the life of the client, and that's a difference from $900,000 to $1.4 million. That's a significant increase just with earning 4% inside there. And if you scale that back, say it was 3.5, you're still going to have some great lifetime income that you can count for the rest of your life. So this product doesn't have like your income multiplier for confinement, but it's there to try to maximize that. One thing that the client could do is take a lower start-off payment and take an annual increase each year based off of what the index performance over here would be. So you took your distribution, we'll say it's $25,000 versus $31,000, but you had a 4% increase, then your payment of $25,000 would increase 4% for the next year, and so on and so forth, as long as that policy was in force, even when you run out of money. And we're doing this all at no fee to the client. So they're making a trade-off of what their accumulation rate is from an accumulation-only product, but by having the stacking income, we can still be competitive. We can give them the income they need and not charge them a fee to do it. So if we look at our outcome, so one, we got out of the SEP IRA. We protected it from market risk because we had the zero floor of the index annuity. So with that lifetime income, we're able to give her that lifetime guaranteed lifetime withdrawal that she's looking for. So she will not be 100% reluctant on Social Security for providing that guarantee. This will complement that. And also from a business standpoint, we're able to max out that tax deduction that she was looking to do as well. So business planning, getting the most deductions there, and also maxing out her IRA. So really a double positive, not only for her as a business owner, but her as the individual planning for retirement. The final thing that I want to share with you, now that we've wrapped up the sales concept there with the Income Choice 10, is the additional perks that we have with doing business with North American. So we value loyalty, we value that continuous support. So in 2019, we rolled out and dusted off our exclusive producer connection, which is our agent bonus program for loyal business. So in a calendar year, if you hit the 1 million, 3 million, or 5 million mark, you can earn anywhere from additional 50, 100, or 150 basis points. That's based off of a street compensation of a product like Income Choice 10 at 675, which is our standard street comp. So the great thing, as you hit each level, those are retro paid back to the first dollar of the year for fixed index annuity business, and then all business going forward. So just by hitting $1 million in production, that's a $5,000 additional compensation to you. What could that do for your marketing budget to be out there and do more seminars, get in front of more clients, do client appreciation events to turn out more business? When you hit $3 million, that's an additional $15,000. So before you add on the go forward business, that's $20,000 in additional compensation. Again, what would that mean to your business as you're trying to take yourself to the next level and grow your business? And then if you are hitting the $5 million mark in the year, again, right there, that's an additional $25,000 in compensation. Again, you add that all together, that's $45,000 plus all the comp you earned along the way and the additional bonuses once you've hit each level. So those are just our retro payment dollars. So this is a look again how that would work. So really lucrative bonuses, definitely a great opportunity. And there's still 5 months left of the year, so there is time to turn that on and even get to that, $1 million mark and be able to get that additional bonus and help you get ready and jumpstart off your 2020 business as well. So we plan to continue to keep this plan around as we go to 2020. There could be some modifications. We're still in the planning of that. But this is an exciting program that we're looking forward to having on a go-forward basis and having that retro dollar back to $1. So if you're looking at ways to ramp up, what carriers can you partner with? Again, North American with, being long-term focused, not being subject to those quarterly shareholder earns as a private company. We have the ability to look long-term. That's taken our competitiveness to another level, especially as major competitors, not to be named, made significant pullbacks that are now into effect today or going to effect later this week. So that's definitely something to consider where you're looking at where do I want to represent for my clients and what carriers do I want to take to the table. The other part of the EPC program is the opportunity to be invited to the Connect 2020 Business Summit. That's in Puerto Rico at the Dorado Beach. It's a Ritz-Carlton Reserve Resort. That's one of 3 active Ritz-Carlton Reserve Resorts that are out there. You're definitely not going to want to miss this. This is a once-in-a-lifetime kind of producer opportunity where you get to learn, train, and really network with some of your top peers in the industry. This is an invite to our top 75 producers. Right now, the run rate for that for our top 75 is about $4 million in production. to give you kind of a benchmark of what that might take to get the invite for that trip there. But then you also have a chance to meet with the home office folks here as well, from the president of distribution to the head of the overall index annuities here for Salmon's Financial Group, some of the chief actuaries, marketing, etc., as well as from your sales team. So definitely an exciting program. This is the first year we've ever done a business summit like this. So if that's something that you'd like to try to attend to, definitely reach out to Josh and figure out where we can help you with some of the cases that you're working on with a North American annuity solution. With that, Josh, I'm going to turn that back over. And again, I want to thank everybody for taking time out of your day. Tried to over deliver for you and get you a little bit early out to the rest of your day.
Yeah, no, that's awesome. Thanks, Brett. Appreciate it. And as always, great information. I always get excited hearing about the extra income opportunity for our agents. So I can tell you guys, just to add to what Brett was saying, we have a handful of agents that have made it to that into bonus territory with North American, and they've had a program like that for years. We've worked with them for years and years, and it's always, they might make some slight changes to it, but there's always been something like that as an incentive. So looks like we just had a couple of questions here. So the first one, it was about a recording. So if anybody wants the recording to this presentation, we did record it, so we can happily send that over to you. And then it looks like just one other one was a state-specific question. I'll just throw it out there. We have an agent in Washington State asking if the income choice is in Washington. I don't know if you know offhand.
Yep. Great question. I apologize that I didn't mention state availability. So the North American products, especially the Income Choice 10, is available in all 49 states in the District of Columbia. So Washington, yes, this is available. You'll have a more favorable surrender schedule for your client at key ages. So if you're in Washington, California,
Sweet.
Delaware, New Jersey, so it's available. New York residents, it's not available. You would need a non-resident for a border state to be able to solicit that business.
Awesome. No, that's good stuff. And as we saw, that product is really one that, we don't need to see crazy great performance to see some really nice income. And then the last question was a commission question. So we can talk offline if you want to talk commissions. I'm happy to send you guys the schedule, and we can talk about commissions, since we have we have agencies that get paid all different type of arrangements. So that's kind of the thing that we would want to talk individually about. So we could definitely get that over to you guys. So if anybody else had any extra questions or any clients that popped into mind as the discussion was going through today, please let us know. We're happy to help you work up case design, illustrations, anything that you need from start to finish on your case. That's really what we're here to do at Pinnacle, and we'll be happy to help you out in any way that we possibly can. So again, for Brett, my name is Josh Horton. You can see all of our contact information there. Let us know what we can do to help you guys grow your business. And thanks again for taking some time out to meet with us today. We hope to speak to you again real soon. Thanks a lot, everybody. Take care.